Good morning, traders, and welcome to the Pirate Traders Morning Show. This morning, I'm joined by the one and only Lady D. How's it going, Lady D?
Good. Good morning, traders.
Good morning, everyone. If you have not yet, please smash that thumbs up button. I'd really love to see the thumbs up in the chat, but the thumbs up on the actual like would be even better. So this morning, I put out a survey. If you have not answered the survey yet, what do you think the market's going to do today? Do you think it's going to go up, down, or sideways? Speak now or forever hold your peace. All right, let's find out the results of the poll. Dun, 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 dun. All right. Pretty evenly split. So 42% are looking for a move up today, 28% down, and 28% sideways. So you know what that means. That means there's a lot of uncertainty out there, right? There's a lot of differing opinions about what is about to come next in the market. So right out the gate, we know we must be like water today. We must be willing to accept changes and carry them forward based on whatever happens in real time. Okay, so let me start with my analysis. I would describe myself as still bullish, bigger picture on the market. Okay. Yesterday, the market had a pullback. That wasn't a surprise. We were getting a little bit overextended to the upside. We had left behind single prints from 2 days ago. We had left behind, 3 days ago. We had left behind a gap from 2 days ago. So the market was pushing a little too far, a little too fast. And when that happens, it often needs to spend a day pulling back. The question that we're asking ourselves today is, was that it? Right? Did the market just have a little dip and now the buyers are going to step in and we're going to start the momentum once again? Are we going to go nowhere all day trying to decide, are we going to bounce or not? Or do we have more of a pullback ahead of us? Okay. I think an excellent level, it's always nice. It's awfully polite of the overnight market to just chop and grind in a tight range for us. Okay. The reason that we love that as regular trading hours is because the break of it becomes a very important potential signal. So yesterday, the market broke out of, what was a tight range for the overnight, never even came back to back test it, just immediately started the momentum lower. It liquidated at the very end of the B period, and then that liquidation continued into the C. So that was telling us right out the gate, once we broke out of that overnight range, that we had momentum down. We can look for something similar today, right? If we break the overnight high, we can look for the market to start to retrace some of the move down yesterday. If we break the overnight low, we can look for continuation to the downside. Now, we won't necessarily get a liquidation like we got yesterday because, we already got all the late buyers, all the FOMO buyers that were buying the highs squeezed out. So we probably won't get a liquidation of the low, but new selling below the overnight low would be bearish for continuation lower. At the very least, to head down to 58.48 and then monitor for continuation lower from there. And new buying above the overnight high would increase the odds at the very least to come back to the first set of single prints to about 58.95. Okay, so we'll let them chop. We'll let them grind inside this overnight range, which is between like 58.68 and 58.53. We'll let them grind around in there, but whichever they break, that's the momentum that we'll look for in a particular direction. Lady D, what are your thoughts on the market this morning?
Yeah, I wanted to talk to you about the liquidation that happened yesterday, because I think there's two things we really need to keep in mind. First of all, on the longer time frame, which is something I've been talking about a lot on this show lately, in terms of making sure you're really aware of the bigger picture of the market. On the monthly, we have like 3 months up. On the weekly, we have 3 weeks up. And on the daily, there were 4 days until yesterday that were all to the upside. Now, all that long-term information, in my mind, definitely gave me a bias to the upside. We've been waiting. We've been in this huge balance for weeks now. We've been waiting for that breakout. So I wanted to share with you, a couple things that is interesting, because what I'm noticing, we've talked about this lately, how the market has changed. There's so many artificial computers trading the market. There's algorithms. There's these new daily expirations. And I've just noticed, as we've been talking about, there's just been a real change in the way the market moves in the past, I don't know, would you say 6 to 12 months, Charles?
Yep.
Maybe.
Yeah, I
Yeah,
mean, it's
so
been happening slowly over the last few years, but it's intensifying over the
really
last year.
intensified the last 6 months. And I just want to point out that, sometimes the market makers like to do this when it's so obvious that everyone sees one thing. They sometimes do the opposite. And I think that's what happened yesterday because are you sharing my screen now? I want to point out some stuff on my screen.
Go for it. Yeah.
Okay. So obviously, we had, again, I always do my top-down analysis before the market opens. And as we talked about, I also watch the market from 7 to 8:30. I'm just trying to get a feel of, do I feel like a lot of buying happening pre-market? Can I tell if some of the bigger players are buying in lots of volume? We'll talk about that a little later. I screenshotted some charts I want to share with you. But for yesterday, I think what happened yesterday is just a perfect example of making sure we maintain all of these things in our day as day traders in the back of our minds as one patient wait for information during the A and B period with all the chop that was happening. I think this is so true. A lot of traders lose a lot of their money during that first hour in the chop because it's just trying to find what direction it's going to take for the day. You're gambling basically if you're trading in the first hour. So if you had been patient yesterday and really waited for the information, and you were on the long side, you probably would have really minimized your losses or not taken a trade until we saw that liquidation, after we went below the overnight low. So I definitely yesterday had a bias to the upside. I've been waiting for this breakout for a couple days. You can see the last few days were just like very rotational, very stuck in tight ranges. I have to say that on the open yesterday, sorry. Trash all of that. So yesterday on the open, that's my analysis. I did want to point out that if you were really being aware in the market what happened the day before on 10/14, I did notice as it seemed like this might have been the day, excuse me, of the breakout to the upside because we had the A and the B period one time framing up. I did notice that when we got to this level up here, tempo really slowed. So we've talked about this before, noticing the tempo, noticing how fast or slow it's moving. It just was trying to go higher and it really couldn't. So then we had this break and then we left these two weak and poor lows at the bottom. And there was one over here too. So going into yesterday, having two of these references plus the gap, which here was the gap bottom from below two. We had the gap that needed to be filled and we had these 2 week references. I was very conscious of the fact that this thing could break to the downside. And we also had, I think it was a prominent POC. Yeah, here too. So I did feel like there was going to have to be a liquidation break at some point. I didn't know when it was going to happen, but I didn't do anything in the A and B period. And I'm so glad because as I was sitting there watching it for the first hour, I also, as Charles just pointed out, we had all this time and volume in the overnight in a really tight range, the same range we spent hours and hours the day before. So once the market came up here and I saw this volume node right here building above that, all of that time and volume, I thought, oh, this is going to be it. This is going to be the breakout to the upside. I mean, in my mind, that's what I was thinking. I was like, don't jump on that wagon because we know we have these 2 weak references and poor references, and 2 increases the odds that at some point they're going to have to be repaired. We had the gap below. So I was just watching and watching. It was misleading though, because we had this volume and spent a lot of time kind of above this area. Now, I also had on my charts from the monthly calendar written this, and I'm on the NQ. I just want to be clear because it's different than what Charles, with the ES. But I did have this volume of node where this would have been the breakout on the monthly. There was a monthly balance area. So I had that marked. I also had marked on the daily right here. There was also a breakout of a daily flag pattern, which we've talked a lot about those consolidation patterns. I really specialize in those. So I had the daily and the monthly. So as the market started to break, I was thinking, okay, we're either going to, find support at the daily once the monthly broke. And it didn't. The market just kept liquidating. So then in my mind, I was thinking, okay, I know a big liquidation break is just to take out the weekends, the retail traders like us. And this thing in my mind, I thought was going to turn around and flip and just go back up. Now that we've had this liquidations often strengthen the market, right, Charles? Liquidation breaks can strengthen the market. We can get very misled if we jump on these large sell-offs too quickly. So I really was baffled a little bit yesterday until, as Charles said, we broke the overnight low. We had this massive liquidation, and then what happened for the however many hours of the day, we had a triangle pattern. That pattern is one thing I'm looking for, and look, it broke to the downside. So one thing I want to also point out, though, is once the M period, this is the top, there was a spike. And if we opened right now, we're opening above the spike. So that's more bullish than more bearish if we still stay here in the next 15 minutes. And also I want to point out that at the bottom of M, I hope none of you got caught in thinking that this thing was going to keep liquidating at that point, because we also, going into today, just notice we have 3 poor highs. I think I can't even read that. The JKF period up there are at exacting levels. So, that was just the bots selling at the exact level. But when we got to the bottom of M, time and volume slowed. And I want you to really pay attention to this, because that is your clue. Do not stay short. If you had gotten caught short here, you would have lost a ton of money, because look where we ended up. The end period ended up almost back up to the POC. So it's not as bearish in my mind as if the MNN had kept spiking down and we settled inside the spike. So that's still a little bearish, but because of the volume and the way it flipped, I'm not as bearish as I normally would be if that spike had been straight down. So Charles, what are your thoughts on all of that?
Yeah, I mean, I agree with all of that. The couple of nuances that you didn't mention that I would bring up, let me just pull up my chart real quick. So for me, when I was looking at the Q yesterday, it seemed more like it needed to fill the gap, like right at the market open. And the reason was because of that multi-day balance that we'd had. And so to me, if you have a breakout of balance, that's a reason to come back and back test the balance area high. And if you have a gap, which happens to be the exact same place, that balance area high, that's a very good reason to come back and test that balance area high. And just like first thing in the morning, I felt a little unsure. I did feel bearish when the market, and it was almost right away, it got a look above and fail of the overnight high. So that made me think we have to test that overnight low. And obviously, once it got there, it liquidated so quickly through it. You had no time to even figure out what was happening.
Right.
But yeah, so that once you got that move below the overnight low, to me, there was a very high probability you were going to back test that balance area and you were going to fill that gap. Once you filled that gap, the market kept going in the C period. Now, I wasn't watching the screen at the time, but the market just kept going. So if I'd have been watching the screen at the time, I would have been thinking, okay, re-entering a previous balance area, where is the market likely to go? To those balance area lows. Yeah. And it didn't quite get there until the very end of the day, but that is where it eventually went. So as far as the spike down is concerned from yesterday, normally I'd be very bearish with a spike down. Although by my definition, that isn't technically a spike because you did close back up in the range. But, but today I wouldn't be, because it was also a balance area low, right? That's an exact area where the market found support 3 days in a row and then ended up going higher. So no reason why you couldn't find support there yesterday and end up going higher today. So yeah, I think the NQ and the ES I'd put in the exact same boat this morning. Buying above the overnight high is bullish, selling below is bearish.
Okay, so I wanted to share some pictures too, actually, here from yesterday. This is today. Sorry, let's see. So it's 7:50 a.m. today, as we're talking about, this morning. There was an announcement. So I just want to point out to people, all of these arrows are pointing to the fact that there are buyers down here. Every time we've come to this area, we've got a big wick at this arrow, a big wick at this arrow, a big wick up at this arrow. I mean, you can see these large wicks in this area. So this area is an area where buyers are present. So I just want to caution people for today, for anyone who's thinking, this thing's going to keep selling off. Be very careful in this area down here, because there are buyers. And generally, if there were buyers there before, there's going to be buyers waiting there again. So I would just be careful, especially at the open. Once we get down to this area around 23.28, between 23.28 on the NASDAQ and around 23.40, there are buyers. So whether they'll be there today or not, we've come down to this area 3 or 4 times and the buyers were there. Maybe they'll give up, but I just would be cautious. I just wanted to point that out. And then also this morning, yesterday, before the open, this is a consolidation period that happened overnight that we were talking about. And I just wanted to point out to those traders that, again, we see it's the opposite up here. We see these big wicks. There have been sellers around this area. Now, it was misleading because we had this move up between, I think it was like 7 and 8:30. There were all these big green candles. But then notice when we broke out of this consolidation area and the market opened, this is where I felt the tempo kind of getting slow. And this is where, I was hoping this breakout would continue and it didn't. But again, if you look at the longer time frames, look to the left, see if you see a lot of wicks, if you're on candlesticks, if you're in window trader, if you have the selling tails, because those are areas where I have learned I proceed with caution. I don't take trades if I'm not sure what's going to happen. I will wait. And yesterday was a perfect example. I saved myself a lot of money by not jumping in the initial balance area. And so I think if there's anything we can do to help, our listeners out there, just to be cautious in that first hour, it can save you a lot of money, a lot of time, and it raises the probability of your trades once you wait for that break of that IB.
Yeah, and there was plenty of money to be made afterward too.
Yeah, tons of money to be made.
Tons of money to be made yesterday just trading the trend once the market was trending.
Tons, yeah. So that's what I have for today.
Fantastic. All right, let me just check the chat, see if there's any questions worth touching upon there.
Yeah, let's ask the chat if can we ask them to respond what they would prefer for us to do? Do they like us in doing the technical analysis? Should we spend more time on our banter of how we got into trading and what our stories are? Would they rather hear, our analysis exactly like we're doing it, or any changes? Let us know, because we really want to, be helpful to those people that are with us from 8 to 8:30 in the morning.
Yeah, it's a great question. Let us know in the chat what you want out of this morning show.
Yeah.
Are you more looking for us to just tell you hey, this is what's going to happen today in the market, or at least our best guess of what's going to happen today? Here are the news headlines you may want to be aware of, and that's it? Or do you want us to try to turn this into a little more educational, a little more conversational? What do you guys want? If you can let us know in the chat, we'll do a better job of making this show better. And then maybe you guys will do a better job of sharing it and spreading the word. Maybe you'll post about it on Twitter or in your favorite Reddit group or Facebook group. Maybe you'll jump on someone's Discord.
In the morning, we're all a little groggy, so we want to do anything that'll make it more entertaining for you, and any stories that might get you excited for the day to trade. That's kind of what we're looking for, and we want to be here for the listeners and help them get on the right side of the market for the day. That's our main goal, right, Charles?
Yeah, there's multiple people complimenting you, Lady T.
Really?
You're the part of the show they like. Oh boy.
Oh, thanks. That means so much to me.
Thanks for that.
Thank you, guys.
We will go through these comments later and dive in and try to take this into account moving forward.
Yeah, because I think I told you I've been reading The Market Wizards, the first book, and I'm just so fascinated at how their journeys are different, getting into trading and what made them successful. And I'm really taking this away from so many of the different people that were interviewed in these books. I've read 2 of the Market Wizards books now, is that they say the number one thing, the reason most traders fail is because even if you've devised your trading plan and you've taken the data and you've back tested everything, what separates the successful traders from the non-successful traders is that they don't follow their own plan.
Yeah.
And they try to take trades, off the hip, or they see something happening and think, I'm going to get in, I'm going to make all this money. And then they get caught. You have to stick with what works. And it's hard when you see, like yesterday, the market, selling off so quickly and there's so much money to be made. But that's not my plan. I'm not a swing trader. I'm not even a long-term day trader. I'm more of a scalper. Mm-hmm. And I'm finding myself trying to take those longer-term trades. And then I'm sitting in a trade and I'm getting super anxious, waiting for this thing to work out. Like yesterday in the middle, once we had that sell-off, we spent hours and hours going nowhere, right? Mm-hmm. And I was just like, those kind of situations, I feel my anxiety rising and I get really stressed out. I'm like, if you just stick with your plan, you'll make more money than you ever needed. So don't try to go for these long things or try to get caught in the initial balance area where it's just the people are getting chopped up and losing money left and right. Like, find your plan and follow your winning strategy, and don't become an expert at that one thing. I mean, that's what all of these traders basically said. They devise whatever their plan is that work for them. Whether it's, I know, Charles, you like the ES because it's a little easy, it moves a little bit slower. You can wrap your mind around it. I'm more of like, I like the quick movement of the NQ. It keeps me engaged and super focused. So, finding the right market for your personality, finding the right strategy that works for your personality, and then sticking to it, like discipline.
Discipline. Yeah, discipline. That's what I preach so much in my course, because
I know
you can,
and I love your courses, by the way.
Thank you. You can control your, like, how well your system works. You can study it. You can say, I take this trade this way and it works out this percentage of the time. I can make adjustments to it in this way or that way, and then I get better results. You can control that. That is within your control if you have the discipline to force yourself to do it. But you can't control the market. You will never control the market. The market will always be weird. It will always be random. It will always do exactly the opposite of what you expected. So if you can stay in control of how you approach the market, you can get better results. You know what I mean? But that is the hardest part. And the other thing that I would say makes that even harder, the thing that I have always and think I always will struggle with, is as the market is changing, as the behaviors of the market change, I'm constantly trying to find better strategies to trade it. And the balance between that of like only trading what I know works and following my plan and have my system, but also experimenting with like, maybe it would be better for me to take a scalp here rather than sitting in the trade for hours. Or maybe it would be better for me to wait for a back test and give up on the trade if I don't get it or whatever. It's like, you got to do a little bit of experimenting because you do constantly have to change with the market. But at the same time, you have to have that discipline and stick to what works.
Yeah, that's such a good point too. Because a lot, again, I think I read this book on Sunday. I think I almost read one of the whole Market Wizard books almost in one day. That's exactly what a lot of the traders, some had made millions and some had, had big losses or blew up accounts, but they all said the same thing, that the difficult thing with the market is like, there was a guy whose strategy just stopped working all of a sudden. And then he stayed out of the market for like 6 or 12 months to find a new strategy and be an expert at that before he started. He wasn't trying to trade like old strategies and new strategies and testing everything at one time, because for him, he said his mind just didn't work that way. It was just too difficult to try to keep changing strategies, because then his discipline in the entries and the exits of the trade weren't as accurate because he had too many options. Like, and I think that's one thing. I had a private coach for a while that he was so fantastic. And he taught me, like, become an expert in one strategy first. And then if it stops working, and another thing, the book that was so interesting, people said their strategies stopped working because when people find out that it works and everyone does it, then it stops working. So
that's the nature of markets. The market is constantly hunting for some sort of pattern. And if you recognize that pattern and you start making money, other people will recognize that pattern too.
Yeah,
it's just, there's millions of people watching these charts every day. Someone's going to figure it out. And the more people that figure it out, the less it'll work. It's just the reality of it.
One of the traders said too, that's such a good point, Charles, was that if it's an obvious flag pattern, like this one we have on the screen over here, everyone sees it, right? And because the tail of this flag pattern is all green, the probabilities of this flag breaking out to the upside are slightly higher than to the downside. And of course, the market knows everyone sees that. So what happens? It breaks out just a little bit, and then it fails and crashes to the other side.
Well, that's these bots that we've been talking about so much. I mean, I feel like I'm sick of talking about these bots.
I know, but it's relevant.
But it's so true, because it's like, that's what they do. They study what works. They study what traders' behavior, and then they make it look like they're giving you the perfect thing. That's exactly what you expect. And then out of nowhere, they flush the market and they reverse it. And it is deeply frustrating, because the only thing you can do as a trader is accept the loss, get stopped out. Don't try to stay in the trade or hope and wish it'll turn around. and then immediately do the opposite. Take
Yeah.
whatever you were convinced is happening and instantly convince yourself, nope, the opposite is happening, and then start taking those trades, because that's the only way to keep up with the computers. It's nuts.
It is nuts.
All right.
All right. Well,
we
thanks,
will leave
guys.
it with that. I
appreciate
will
the
go back.
comments.
Sorry, what'd you say?
I said I appreciate all the comments. I'm excited to read them, and
Yeah.
I'm glad that we can be of help to all the people that are listening to us. And we want to grow, and we want to expand, and we want to keep getting better. So let us know your thoughts.
Absolutely. Yeah, I couldn't agree more. There's a lot of great comments here. I'm going to go through. I'm screen grabbing them right now, and I'm going to go through and study them like a professor.
Yay.
I guess the professor doesn't study, the student does, but you know what I mean.
Oh, professors study. Trust me.
Yeah, that's true. All right, guys. Well, we're going to call it a day with that, and we will see you
All right.
tomorrow morning. Thank you, Lady D.
Happy trading, everybody.
Bye.